Welcome to Exchange Rates UK TV. I want to spend a little bit here looking at the dollar index as an indicator of whether or not we're going to see the dollar collapse further, or whether we're going to see, well, I guess the inverse of that. Seasonality and anniversary dates matter in foreign currencies. Well, not, I guess for any instrument, seasonality is important, but anniversary dates, they're going to vary from instrument to instrument. And as a Gann analyst, I really take to heart something that W.D. Gann wrote, that, you know, if there's a major low, a historical high or low that occurred in March, then look to March being a month where you're going to continue to find some major minor swing highs and lows. January, the month of January, seems to be a month where we often find the dollar index at an inflection point. So here we are in January 2021. Actually, let me just wipe out all these drawings here. Here we go. January 2021. It's not exact. And then we have January 2018, 2019, January of 2020, January of 2017. And I don't know how far back we really want to go, but we can. It's not going to take long to plot these out. Just kind of getting the rough area. So I don't see a whole heck of a lot of activity back here. Get rid of the Ichimoku so it's a little easier to see. January 2012, 2011, 2010, 2009, and 2008. We'll go that far. So this is the weekly chart, and as you look, you definitely can say that yes, January is very much an area where we expect to find some inflection point where there's certain types of major highs and lows. Additionally, you know, this prior low here, the 2018 low in February, this was at 88.25. We're right within that value area. That's actually where we saw the last bounce occur in the dollar index. This is now, and we've talked about this a little bit. A couple weeks ago, I talked about how we should expect to see a bounce occur. We're at 294 days. That is close to a Gann cycle, 42 bars. That's very much an Ichimoku number. 42 is an Ichimoku number, so, and 45 is a Gann number. So cycle-wise, we have a whole ton of cycles kind of collapsing and converging onto this entire zone. Now I want to take a look at our oscillators. I know that this is a historical support zone. I actually don't think I get to see, I don't get volume on this one. I want to look at my oscillators and see if there's anything of note here. And why am I spending a lot of time on the dollar index? Not a lot of people can trade it, and not a lot of people do trade it. Well, I mean, it's the barometer of the major pairs. The dollar index is a basket of currencies. It's mostly made up of over half of it is made up of the euro. The remainder is the Japanese yen, the British pound, the Australian dollar, the Swedish kroner, the Canadian dollar, and some others. And so if the dollar index is doing very well, we expect to see the euro dollar trading lower, the pound dollar trading lower, the Aussie dollar lower, Kiwi dollar lower, and so forth. What I'm looking for right now is I'm looking for some type of divergence that exists on the RSI and the composite index. I want to know if there's any type of any hint of some type of bullish divergence that exists. I currently see a small divergence. It's barely perceptible. I don't even know if we could call it a divergence yet, but currently we are seeing the RSI on the weekly chart. We're seeing the RSI dip while we're seeing the composite index rise. Now, I think I mentioned this a couple weeks ago where this scenario here, you see the composite index, which is the red average, view it like the RSI, and then there's a fast average of the composite index, which is green, and a fast moving average of the composite index, or slow moving average of the composite index. It has just crossed above both of them. That is a bullish sign. We've also seen the percent B cross back above 0.2. That also is a bullish sign. But we need to be aware that this is in a bear market. And so our RSI levels adjust. And our oversold levels in the RSI are not 30. It's 30 and 20. And the overbought levels in a bear market on the RSI are 55 and 65. So we have not yet reached the support limit on the weekly chart for the RSI for the dollar index. In fact, last time we traded up there was in May of 2000, or sorry, May of 2020, and we've had some significant downtime here for a while. So I would look to continue this rise in the dollar index. If we don't, watch out, because there is it is bearish, so we could see the composite index dip lower, cross back below the averages, and then if the percent B dips back below 0.2 as well, that's very bearish. And this is especially true if the percent B line crosses under 0.2 while the RSI is above level 30, which it is. So watch out for that. But otherwise, there's a lot of signs pointing to some continued short-term upside potential here. As we go back to the Ichimoku chart, we know that we have not tested the Kijun Sen. Technically on the weekly, we have not tested it since we broke down below it back in May of 2020. This is our first test of the Tenkan Sen on the weekly since November. So it's normal to see a little stopping pressure here, but otherwise, how far up do I think it's going to go? 91, 92, 92 even. Probably the highest it's going to go before we see another good amount of pressure pushing it down lower. So just be aware this is a touchy zone to be in, and keep your eyes open. From those of us here at Exchange Rates UK TV, thank you for watching. Don't forget to like and subscribe. I look forward to speaking with you in our future videos.